day, all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday, the 27th of January, 2020, and we're just after 5 p.m. Central Time. So what we've got behind me is the market reopening. So you're looking at the Tuesday trade, the early part of it already, so it gives you an idea of what you're walking into. Gold up a little bit, silver up about 2 cents. Copper market, which was down hard today, up a quarter. Stock market, a little bit of a bounce. Bonds and notes giving back a little bit. And we're still weak in the currency markets, but well off the lows that you made intraday today. Let's go right to the chart. When we look at the chart action on a weekly basis, we are still up $8.60, and this is still a new high for this whole move. That's what I care about. When I take a look at what the market is doing, if you look at Missile Day, and that's what this big range was, that was the day that Iran attacked the U.S. base in Iraq. You can see that we're doing our job of clawing back into that, but you haven't taken out those highs, even with the coronavirus scare that has gone on. You almost have here a saucer. You can see how the lip has come up, and the question is, what happens with that? Another one of the chart patterns. If you don't have them, go to our website, sign up for the chart patterns. Be happy to send that out to you. When you look at the swing lines, again, this isn't perfect because this day that I'm pointing at was an outside day down, and the low of this day took out this arrow's day. So I keep that in the back of my mind. Yes, the swing line in true theory is up, but you shouldn't have taken out that low, and that throws that off for me. When the market came down, it came down into the 18-day average of closes. This red line held it, and the market has since moved back up. So I've got the swing line that I can argue either way. Is it up? It certainly, I can argue that it isn't the cleanest up that I have. I can certainly argue the bias is up as the market has stayed over the 18-day average of closes. What else? Here's how you're coming in. What is the one thing that I preach here? Win, lose, or draw. You're not going to get me to change what I teach. The first challenge of a Bollinger Band is where I think pros take money off the table, especially if the market's not coming out of a real tight, narrow range. Well, I don't call that a tight, narrow range. Today, the market got up to that number. The upper Bollinger Band number was 1590 even. You got as high as 1594.70, and you're still at 1586.60. So I think the pros took some money off the table here at a resistance point caused by that band, and momentum is up. So I have the bias up. I have momentum pointing up. I have the market going to an upper Bollinger Band on a world scare of a pandemic. The market ran into that band and paid attention to it. That's all I care about. On pullbacks, we might see more support at the 18-day average if it gets there at 1565.60. To stay over the upper Bollinger Band, keep in the back of your mind, you only do it 5% of the time. When we take a look at the gold-silver ratio, it is still not favoring silver. You don't see this dropping down hard the way you would in, say, if you looked at the WTI versus Brent crude, you can see wild swings in that one. You're not getting it here. Silver's still the laggard. Let's go back to Friday. I'm going back to Friday because we did the weekly charts on Friday. Monday through Thursday, we do the daily. The chart had a lower low and a higher high. We all know we're waiting to see what what's going to happen, if you will, and this is, as I said, Friday, with this coronavirus. Is it going to spread? Is it going to get worse? Nobody knows what to expect. If the market goes up, what am I going to tell you? I'm going to teach, and I do it, that my teaching says you come out against the upper Bollinger Band on the first attack of it. Now, unlike gold, this is a bit narrower of a trading range. I see that. Still, you can do that. Do you take off all? It depends how many positions you have. Ideally, you're always trading more than 2 contracts at a time, so you can pull one, have a stop on the other, whatever you want to do. But I'm not going to change what I say. On the first challenge, I believe that the professional trader takes money off the table. Market goes up, hits that, and here you are. That number was 1833.5. You can see it was 1832.5 today during the day. It finished 1805, and it's 1807. I'm going to stay with what I know. I think that's what the pro did. Are we trending? No. You've got a lower low and a higher high. You're caught in sideways lower band to upper band, and a market that has worked out of an oversold condition. Copper market, it's past tense. You went through the lower band here and you've just kept running. That happens. If you're playing that you'll get that type of trade over and over, God bless you. I mean what I'm saying. It's probably low probability. This took this fear to get it done, and it just went. Now, let's assume you took part of your position off there, as I said, and you had a stop, a trailing stop. You've not had one day where a previous day's high has been taken out. That's the point. In the platinum, the trend is now down. You have lower highs, lower lows, first time that you closed under the 18-day average. What's the risk associated with going short? Well, if you're selling at the 18-day average and you're putting a stop over the most recent high, it's rather substantial at 1025.50. So that is something you'd have to consider. In my charting course, I teach money management, and I don't know that a $30 risk warrants doing anything like that. Other than an embedded trade, I set parameters that don't go beyond $600, not including commission, slippage, things like that. In other words, an eyeball number. And I break it down from low risk to high risk trades if you take the course. It's all done there. Now, I'm bothered by this. Here you had a market that on Friday still had the embedded reading, but you can see it's leaning. It either pops right back up or you're going to lose that. Today you lose it. So if you lose it, what is the thing I'm going to tell you? I think the pros could be bailing here, looking to see if prices get to the 18-day average. Then they'll see what they want to do next. This is how the market, we don't have a quote yet for Tuesday yet because it hasn't opened on that exchange, but you were down 142 under that low, and for me that's the warning sign. I'm not bearish, your bias is still over that 18-day average, but you can fall the rest of that. In the dollar index, embedded reading, sort of a panic move here. You can see it through Friday. If you go up, maybe the upper Bollinger Band. Now you got to be careful. You don't have to hit it. You're within striking distance. So you got to think you're in a zone where you need to get more of this information fed. Do I think right up here, from here to that band, the pros are taking some money off? Yeah. Trailing stops if they've got multiple positions. Embedded reading is the reason for the trailing stop. But the moment the market bites you, you're saying, I'll start again. Because futures are like an airplane schedule. There's always another one. A train schedule, a bus. There's always another thing coming around the corner. And I'm warning you, if you're playing for that one copper move, God bless you. It's very, very rare, and it takes something like you just had to get it done. Now, I want to remind you about what we offer here at Linn & Associates. For those of you that like real detailed research throughout the trading day, commentaries on the markets, oral, that can play right through your system, our quote system, it's got it. It's in our QT, even our phone systems, it's got it. And it comes from seasoned pros. We send it both by email, but I'm telling you, the ideal way is through our charting software, and the reason is you've got all the edges right there. You can be listening to one thing as it comes out, watching the metal markets, watching what the financials are doing all through it. You're going to get different points of view on it from our different research people, different ways of looking at charts. If you haven't tried it and you're a trader, you should. Take a look at it. You don't have to work with it. Just take a look. You can get it by calling us. You can go to our website. On our website, by the way, if you look in the bottom right, you'll see free research offers. Just click off what you want there, and you can always click up here to get the same thing. In the meantime, I'm Ira Epstein. You have a good day, and I'll see you.